Fresh as always here, Jermal. We're talking about hedging stocks with futures. You and Pete Molmet went into a little bit of the why. We're going to get into the how. We're going to show people how today they can hedge their so much stuff, so much BS in financial content, be it books, podcasts, videos, everything else down the line is like, here's a bunch of educational stuff. Goodbye. And what we try to do here is like, this is what hedging is. This is why you do it. And we're going to show you today how you can hedge your stocks and leave you with no questions to ask. Hopefully, if you have any questions, you can find us on Twitter and ask those after the fact. But I thought this was an interesting fact that I posed to Pete and a few other people in the last week, is that the S&P 500, Jermal, between 1990 and 2017 climbed from $300 to $2,300, okay? A $2,000 rise in one of the most ubiquitous equity benchmarks on the planet. Since 2017, the last 3-4 years, they've added another $2,000. Now, I know how percentages work. Okay, the climb from 300 is a lot big, from 300 to 2,300, a lot bigger of a climb from 2,300 to 4,300. But 27 years to add $2,000 to this index, and then 3.5, 4 years to add $2,000 to this index, it doesn't seem sustainable. And look at this chart, man. Like, and this is why we talk about hedging stocks. Like, is it possible for a market to just grow 30% year after year, right? Like, it looks kind of crazy when you put it like this.
Yeah, I mean, this is kind of nuts. And, I don't want to say anything to discourage people from hedging, but I mean, it's interesting, particularly when you look at that time period, 2017 to present, right? There's been a lot of intervention from the Fed, over these last couple of years for various different reasons. We've had interesting things happen. And so, you wonder sometimes, I mean, I think that's why this is the good thing about talking about this for me and wanting to get more interested in hedging with futures is because at times, for me in the past, and I mentioned this on Tuesday, and I'll talk about this with you, most of hedging for me was the idea of buying put options against, whether it was individual stock that I owned or against the entire market by, going something macro, whether it was SPX or SPY or whatever. And of course, in that situation, you got to deal with the premium suck. I mean, That's the hard part about it, right? Like, you may be right, and stocks may fall, but has it gone through your strike? Has it gone through, the break even, if you will, depending on how near term your option is? And so those are the things you got to deal with, man. And that's a hard game to play. I mean, it's a hard game to play and hard to know when to take it off, to close out that put option. So, overall, I'm kind of getting long-winded here, but I mean, is it sustainable? I don't know. I mean, again, would we be down today if there wasn't this talk of the Delta variant fears, right? Like, I don't know. It's interesting.
And that's, I don't mean to put you on the spot because, this quickly became like, all right, Jermal, like, is the stock market going up over the next year?
Those are my thoughts.
Tell us right now where the stock market's going. Nobody knows. And that's why you had, like, if you knew the stock market was going to continue to move higher and maybe you say this is the new sustainable, then you're not going to hedge. You're just going to keep 100% of your portfolio. If you say, oh, it's unsustainable, the market's going to crash, then you would just take all of your investment out. Nobody knows. And that's why we talk about hedging, because the idea is not to be like, oh, this type of growth looks and feels unsustainable, so don't invest in the stock market. No, on average, the stock market moves higher. And so the idea of hedging is just is quite literally like the way that you think about it emotionally or colloquially, like, oh, I'm going to hedge my bets by doing this. Oh, I want to be invested in the stock market, but I'm going to hedge against a big downturn that we could be due for, given the fact that we've never climbed this far, this fast, without any downturns. And I'm glad you bring up the options piece, because futures are like, this is one of the top things they've been designed for, is hedging. Because the idea is, I have, let's say, $80,000 invested in the stock market, Jermal, and I want to hedge 10% of that. Well, the SM75 future, which is $80 times 100, so $8,000 worth of stock, in the same way that if you had an $80 ETF and 100 shares of it. Well, I sell one of those futures. I've hedged 10% of my $80,000 portfolio. When you rope in options and you talk about buying a put, well, okay, I buy a put for the next 30 days. I pay, let's say, $5 for it. And so that's, $500 sunk in premium. If the stock market moves 1% lower and it doesn't get to that put strike, I sunk on the premium and I lost on my investment. It's tough because a lot of things have to happen for you to either A, be right on your investment, or B, have the hedge be useful. And a lot of times you're in this middle ground of like, I lost on the investment and my hedge cost me money. And also with covered calls, maybe you can speak to this, because a lot of people get confused with covered calls. It's like, oh, I want the stock to go up, but not too much. Because if it goes up too much, then I get called away and my investment is gone. And it's like, no, like, even if you hedge your stocks, you still want them to go up, right? Like options just can be a little complex when it comes to hedging.
Yeah. I mean, you have to have a certain, I think a covered call is a good one because it's one of those where you have to have a certain mindset of what you want, to happen in that type of situation. I mean, especially, and it's different depending on how long, you've had the stock and if you're fine or comfortable getting called away at those situations, at those prices. I mean, hedging is one where you can just, I should say hedging with futures in a way is one where you can do it. You can almost do 1-to-1 depending, even if you don't have a gain, right? Like you can just still hold whatever you have on the long side and you can go ahead and, do this situation of an SM future, short that. And either way, you can look to take it off at different areas. You can look at it as a, type of trade, over a smaller time period, and you don't have to worry about the premium part, right? Like, and again, I hate to knock, buying puts. I mean, there's certainly scenarios where that works, but there's a lot of times where, you're kind of holding it for peace of mind and you're watching the premium just kind of fade away. So I think this was definitely one of the impetuses for me to want to get used to trading futures. So for hedging purposes, right? Like this was part of the main reason, and no, you certainly didn't put me on the spot early. I mean, this is really where I'm thinking right now. Like if you look at today's market, right? We had a big move down and we've climbed back quite a bit. Now, what's the next step? Where do we go? We really don't know. I mean, we see VIX is kind of, the VIX futures are kind of holding up in the positive area right here.
Sure.
So we're not sure what's going to go on with this market. And so those are the situations where you think about hedging because you're uncertain about what's about to happen next.
That's exactly right. And what's great, we'll get to the flexibility piece here in a second. That's where we're going to end off, is like how you put the hedge on and how you take it off. But what's really nice, like options are so sick in so many different ways. It's like, ooh, I've got like theta coming in if I'm short. Oh, like I'm scalping gamma. Like I got all this stuff going on. That's fantastic for certain people in certain scenarios. When I perceive risk in the market, when I'm feeling fearful for investment that I've accumulated over the past several years, and I want to quickly hedge some of that, and I have to look at buying a put, which is like a low probability thing that, like we say, we can lose on both the hedge and the investment, which seems ridiculous, or the call, and it's like, oh, what do I actually want this to do? If I bought the stock if I'm long from 100 and I sell the 105 call, then I kind of want it to trade at like 104.50. And like the call is out of the money and I still get my investment. And it's like, well, now you don't want the stock to go up. So like, what the hell do you want? It can be confusing. Here, it's 1 for 1. Like I say, you have an investment value of X, and you can look at the formula here and fill it in yourself. And you can ballpark this stuff. The only thing that I make sure with people is don't ever end up in a scenario where your hedge is larger than your investment. That is a no-no always. But if you have an investment value of, let's just say $80,000 for simplicity's sake, you want to hedge 10%, 20%. You think there's a lot of risk in the market, Jermal? You can hedge 60, 70% of your portfolio. You look at the small exchange's price. If the future's at $80, it's just times 100, same multiplier for all of the products here. And that gets you to the amount of small exchange futures you need to sell. $80,000, 70% hedge, 7 short futures. And 10% hedge, 1 short future. And what's really nice, Jermal, is no probability garbage where it's like, I want this to happen and this to happen. Yeah. No, you just want stocks to go higher, and at worst case scenario, you lose on your hedge. And what's also really nice is you can get $8,000 worth of hedge for $750. And you can, and we'll get to this flexibility piece, and this is where we'll leave off. You can put it on and take it off intraday. You can put it on and take it off in the next couple of days, the next couple of weeks, months, however long you perceive the risk, you put that hedge on and you take it off for less money, easy to do with the flexibility, and take it off whenever. Like, you could have essentially scalped around your long position and called it a hedge this week, sold the SM75 around $80, bought it back at, I think it got as low as almost $76, made $400 on that hedge, and then go back to 100% investment. Flexibility is huge with futures as well.
Yeah, no, that's beautiful. That was a beautiful breakdown, what you did right there. And honestly, I do remember, I think Katie McGarrigle actually put on a little trade in SM75 today and scalped out of it. So, I don't know if she was doing a hedge, but same deal. I mean, you can, I think that flexibility is something that interests me with futures. That's why I decided to team up with you and Pete so you guys could show me the ropes. You know what I'm saying? Half the times you guys have beat me up on the ropes, but that's cool. I like that too. I mean, I'm okay with it, but no, this is one of the main reasons that I think people look to futures to hedge for these type of situations. I think the biggest thing for me coming from the options world, like we've just kind of said, and I'll touch on it again, not having to think about the time part of it, right? Like, I don't have to think about what because right now there would be that situation in a let's say 3 years ago, Jermal would be looking at this market right now and or maybe yesterday or Tuesday when we first had this conversation, and when I would have went out and bought some puts, and whether I would have probably bought July, I'm just going to be honest, that's kind of the trader that I used to be. And, then you got the time situation. It's like, well, when do I take these off? Now you have a day like today where we went down big. I would have been waiting on a bigger move. And, then once we started to bounce back and you're sitting in this no man's land that I think we're probably still in once we started the show where, we're only down 30. What do you do? Those are the hard situations, especially with options. And so I think futures takes a lot of that guesswork out of it, like you said.
There's a time and place for the extravagant meal with the wine pairings. Ooh, which appetizers should we get? Oh, desserts, everything else factoring into your decision making. And then when stuff is moving, you're on the run. Oh, I got to get to this meeting. Oh, I got to do this. I got stuff flying around. I got to take the kids here, and then I got to get to work, and then I got to do this, and I got to a dinner afterwards. You slam the Uncrustables peanut butter and jelly sandwich. You slam a protein bar, right? Futures are not the sexiest, most creative thing, but when the market starts to turn, it is the easiest way for me to get that hedge on and take some of that exposure off the table as quickly and as cost effectively as possible. So it's literally, I know it may seem so simple, but literally a matter of, like we say, you've got $80,000 invested. You want to hedge 10% of it, sell one SM75 future, and that's it. That's the hedge, man. That's all you have to. You have 1-for-1 exposure with 10% of your portfolio. When the market moves lower and you think that the fear is gone, buy it back. If the market moves higher a little bit, you lost on the hedge, but then you buy it back and you get rid of it. You made money on the 90% of your portfolio. Hedging stocks with futures, I feel bad, man, because this is kind of a trend on our show, is like, it's easier than you think, right, man? Like it's not as complex as theta, picking an expiration, picking, a strike and all these different things. You want to hedge your stock portfolio, sell a future, just make sure you're not overhedged.
Yeah, no, I agree. I mean, I think, I think it is a lot easier than you think, as I'm starting to realize, of course, you always have to keep in mind, how much you're controlling. I think the understanding the notional value part based off of what you buy is the most interesting thing. An interesting fun fact too. I've actually never had one of those Uncrustables. My kids have had them. I hear they're great. I mean, I actually saw something on this show called Rami too. It's actually what they were talking about. I guess they're really good. I don't know. I've never had one. You said wine pairing. Are you going to dinner or something? Is that why you got the Oxford shirt on? You look cute, dude. Look at you, man. That's nice.
This is the last time. This is the last time I wear a collared shirt to work ever. I try to dress up. I try to look good in front of, Pete is in the office. We got the CEO here. I'm on with Liz and Jenny earlier. I'm trying to impress my friend Jermal here. And it's the last time I do it.
I'm impressed.
This is ridiculous. They said, I don't know if you were raised Catholic or what have you, but they earlier, Liz and Jenny were like, oh, have fun at your confirmation, have fun going to get confirmed. It's like a religious, like, it's like,
I think it looks good, man. I mean,
thank you, man.
You know me, I'd make fun of you if it didn't. No, it looks good. It looks good.
I appreciate that. Back to tie-dye t-shirts tomorrow. But yes, also, we need to get you some Uncrustables because those things are amazing. They're on my mind because Tasty Trade used to buy boxes of them and put them in the freezer. And I loved them so much that, and don't tell anybody about this, but
you hid some, didn't you?
Every day, Jermal, I don't know how, but a couple of them disappeared from the freezer and found their way into my pantry at my apartment on the west side of Chicago. I don't know how it happened.
Won't tell anybody. It'll be our secret. You know what I'm saying? Well, then we'll just do a show one time with Uncrustables. How about that?
Absolutely, man. Yeah, we'll get.
As a matter of fact, we'll wear like old top hats and overcoats, and then like we're uncrustable untouchables. You know what I'm saying? Like, work it in. I mean, yeah, I got these ideas. I come up with them there all day. I mean, you know what I'm saying? Like, we'll do it. We'll do it.
This is great. Yeah, next Thursday, be there or be square. Jermal and I are eating Uncrustable PB&Js. Thanks so much for joining us here, Jermal. This has been a great show on hedging. Not usually a fun thing. I feel like we made it a lot of fun, made it very easy for everyone. You'll be back with us on Tuesday for more of The Leap, your journey from options to futures going very smoothly. In the meantime, man, have fun listening to BIG and everything else, man. Thanks so much, and thanks everybody for watching.